Hey everyone, what's going on? It's Jason here. I know it's a late one, but I do want to bring you guys this update on that short selling story today by the SEC bringing out charges on a firm. Now, we all know that the short selling has been very, very prevalent on AMC. So I do want to bring this up. I do want to show you guys what's going on with that. If you can, make sure to smack the like button down below. It helps out the video. Also helps out new people learn about AMC. And if you're not a sub, make sure to smack that sub button, hit that bell notification, and let's jump right into it. Let's bring you guys a quick update, though. At the end of the day today, we did end at $56.20 in the aftermarket hours. That is a plus $1.20 from that $55 close we had, which is up 2.18%. Now, I'm hoping going into tomorrow, we see this kind of gap up again. It'd be nice. In the pre-market hours, and then heading back over the $60 to $65 range tomorrow would be very, very nice. Now, again, I did say earlier in earlier's video that we could see us break the $100 range this week, going into next week, probably if things hold out like they have been. Now, I still do believe that, and things could get crazy, though, if we see a little bit more of these naked short sellers get called out and see charges brought out, because we could see some of these guys start buying back in those shares before they get caught as well. If you're wondering what I'm using here, I am using Webull. There's a link down in the description. Go down and click on that link, sign up, put $100, you get 2 free stocks worth up to $1,800. Now, over to the reason why we are here. We're going to go over this naked short selling again. Fox News had a great breakdown of this, so I'm going to bring that up, let you guys watch that as well. But I do want to go over, obviously, other SEC, short sellers, things like that. It's been out. This right here is a breakdown from the SEC about another naked short selling case. This was on May 27th of 2021. Now, this isn't the same short selling thing. Now, this does break it down and show you what will happen or could happen to this firm. So naked short selling is often claimed by struggling public companies to be a source of their woes. The thing is, though, I know there's a lot of people in the chat that keep saying like naked short selling isn't that bad, yada yada yada. Dude, you just know, like a fairly little percentage of what the actual naked short sells are out there. We hear about a very small percentage of them. I bet you, man, if we could see the numbers out there between the whole market, it would be crazy the amount of numbers. Just an AMC alone, it's going to be big. But there have been relatively few cases addressing naked short selling because, y'all love the SEC, wink, wink. But they love to look, buy and pass some of these big dogs out there. Recently, however, on May 19th, the SEC charged brokers of BD with violating the order of making and locating provisions of Regulation SHO. Regulation SHO regulates short sales of securities and, broadly speaking, is aimed at minimizing naked short selling, failures to deliver, and other practices. Now, obviously, this is the same thing that this places got charged with today by those regulations from the SHO. What is short selling? According to the SEC's complaints, short selling occurs when an investor borrows a security and sells it on the open market, planning to buy it back later for less money. Thus, short sellers profit from a decline in the price of securities. So obviously, again, they're getting paid to bring this price down. They're betting on it. So they're going to do everything they can to make this go down as far as they can. And honestly, hopefully, they're hoping at the end of the day, I know some of them aren't going to commit, they're hoping that the company goes bankrupt. That way they save money on taxes. They don't care about the workers that work there, right? So, people that work at AMC and others, they don't care about those places. They don't care. They're just there to get money. It's all they care about. Regulation SHO, enacted in 2005, established locate and closeout requirements. Rule 200G of Regulation SHO requires BDs to mark all orders to sell stocks as long, short, or short exempt. A sell order can't be marked long only if two conditions are met. First, a seller must be deemed to own securities, which occurs only to the extent that is net long position in the security. Second, the BD must either have a position or control the securities to be delivered, or B, reasonably expect that the securities will be in its physical possession or control no later than the settlement date on the transaction. Rule 203B1 of Regulation HHO requires BDs to locate the securities being sold before effecting a short sale. This locate requirement means that the BDs must borrow the securities, enter into a bona fide arrangement to borrow the securities, or C, have a reasonable basis to believe that securities can be borrowed so they can be delivered on a delivery due date. What is a naked short selling? Naked short selling is unlawful short selling shares that have neither been borrowed nor located if sellers are engaged in a naked short selling. Then the volume of stock may be larger than the tradable shares in the market, which can lead to sellers failing to deliver securities sold by the settlement date. So as you can see, these companies just don't care. They'll continue to short sell until they get caught. And then when they get caught, they say, oh, it's not really a short sell. We didn't naked short sell this at all, right? This is not true, yada, 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 yada. We had things lined up, on and so forth. And that's the reason why you don't see a lot of this in the news. Now, a lot of people didn't hear about that one back in the 27th. We kind of covered that back then. Obviously, there's another firm now getting caught. The main thing is, though, the penalties for this are very weak. They don't care if they do get caught and they lose a couple $1 million. What's that to the $1 billion+ they've won over that time? And then they'll go back to doing it again because they know it's going to be a long time if they get caught. What's it matter? It takes a while for them to get caught doing it. So on and so. We need more transparency in the markets. We need the rules to be stronger. Now, Fox Business did do a cool little story this day, so I'm gonna pause my big mouth here, and I'll let you guys listen to it as well. It's awesome little. It's about 8 minutes or so, but it's a great take on what's going to happen, what's going on with these naked short sales.
So last week, several Wall Street brokerage firms quietly took steps to curb shorting against Reddit investor favorites. Goldman, Bank of America, Citi, and Jefferies. They all took action. In fact, Jefferies added, until further notice, Jefferies Prime Brokerage will no longer offer custody on naked options. Now, here's the rub, folks. Naked shorting was made illegal after the 2008-2009 financial crisis. So the big question is, why is this still happening? Well, we're going to ask attorney advocate against naked shorting, naked short selling, Wes Christian, is with us. And Wes, just first, if you can, for the audience, people who are unfamiliar, what is naked shorting?
Well, first, Charles, thanks for having me. Naked shorting, simple version, is a seller sells stock that they don't have to a buyer who sees it in their account electronically, but it hasn't been delivered, and the buyer gives the seller money for ultimately nothing that was delivered. The simple version would be if you and I, Charles, took our car title and Xeroxed it 100 times and sold it to 100 people, and each of them paid us cash, but we only had one car. That would be a good analogy to what naked short selling is. In Texas, simple version, we call that stealing. So that's what naked short selling is.
Okay, and that would explain how a GameStop could see 140% of the float shorted because the same stocks were de facto borrowed or not borrowed again and again and again.
No doubt, and there's really multiple reasons for why it still exists. One is it's an enormously large problem, contrary to what some of the other financial press says. For example, in 1993, the fails to deliver were probably several $1 million. By 2003, those fails to deliver in the aggregate were about $6 billion. According to Suzanne Trembass's book, Naked Shorting Greedy, which came from the source of the SEC, just in 2 weeks in July, the fails to deliver were $17 billion. So at the end of the day, another study that Dr. Rob Shapiro, former Undersecretary of Commerce, did many years ago, he's with Sonacon now, he did a study that showed that 500 million to 1 billion shares were not timely delivered, Charles. Now, to be fair, if you take that out 30 days, 60 days from when delivery should have occurred, that number goes to about half. But it is a systemic problem, and it's, go ahead, sorry.
So no, because I don't want to run out of time, and I've got a couple of other things. Hedge funds, we know, are big culprits. What's going to happen here? I guess let's cut to the chase. Will we see the SEC, will we see whoever's in charge take action on something that's happening, it's deemed illegal, it's harmful to the market? Will someone take action on behalf of individual investors?
I think we're seeing a sea change. The reality is, who's really doing most of this from where I sit? And if you look at the regulatory actions at SEC.gov and FINRA, it's really the prime brokers. The reality is that there are some hedge funds, but it's the prop desk of the prime brokers who are doing the naked shorting from where I sit, or market makers. And so ultimately, they've got to be looked at. And the SEC has fined a bunch of them for mismarking tickets long when they're short, really, for pre-programming computers to say hard to borrow stocks, easy to borrow. But ultimately, there is a movement and a sea change about, not only because of the litigation we've done for 20 years with our whole legal consortium, but because of these the Reddit groups and the subreddit groups, and frankly, more awareness being brought to this topic. Hopefully, also with the new SEC chairman, that I'm hopeful will do something more than what's been done to date.
Yeah. Gensler has made comments that gives me hope as well. Everyone knows the problem. We know it's all about money. It's all about Wall Street making money at the expense of an honest stock market, and that's why a lot of individual investors have shunned the market, and once they've gotten in, they become victimized by this. Wes, I wish we had more time. We don't. Congratulations, though. You've got a lot of people out there looking up to you and hoping that you can continue that 20 years worth of work. I think we're right at the finish line. Joining me now, author of The War on Small Business, Carol Roth. Carol, you're a former investment banker. You're a Wall Street insider. You know how it all works. Why does this naked shorting persist?
All right. So first, Charles, a recovering investment banker, not quite former investment banker. It's like a 12-step process. As Wes mentioned, the practice of naked shorting is illegal. It has been so since the last Great Recession financial crisis. But like all of our regulation, there's always loopholes, and the loopholes relate to making markets. And there can be an argument that it makes sense for market makers to have more flexibility for liquidity. But then they need to act responsibly. If you're looking at a derivative product as a hedge, that makes sense. But when the derivative product starts to exceed, the market for that starts to exceed the underlying product it's trying to hedge against, it's no longer a hedge. It is straight up gambling, and that should not be allowed. And frankly, that's why the last financial crisis was so bad, because the same thing happened with credit default swaps that made that market so much larger than the underlying mortgage market.
And you always want to bring up, and I'll let you do that now, that there is a distinction between legal shorting and this naked shorting, right?
Yeah, I think that because this is so complex, a lot of these terms get convoluted. And so while naked shorting is a bad thing and it's a discussion around derivatives, we don't want to throw the baby out with the bathwater. We don't want to say that all short sellers are bad, because they provide an important function. They uncover information in the market about broken businesses and sometimes fraud. And certainly not every single short seller does that. But if you look at somebody like Carson Block of Muddy Waters, who published that anonymous paper that exposed the Lucan coffee fraud when everyone was touting it as the next Starbucks, we want to incentivize people to continue to do that. And it's a really hard job, because not only do you have to be right, but your timing has to be right, and you've got a lot of money at stake. So it's important to distinguish from that function versus naked shorting.
Yeah, I mean, it's one thing to distinction, right, to be able to find those things, and another to be the weapon to bludgeon these stocks. You know, on Friday, Bill Ackman's SPAC got clobbered. It was just the latest SPAC to get crushed. There's also a class action lawsuit out against Virgin Galactic. You know, and the reason I'm bringing this up, Carol, Wall Street, they get to call individual investors the dumb money, and yet they get to make billions of dollars in all kinds of dubious investments. You just brought up some before. You know, and I just think it bothers me that there's this sort of, if you buy certain stocks, you're dumb. If you buy our products and they go straight down, well, it's okay.
Yeah, they use the pejorative term dumb money, because if they called them people who weren't in the know or weren't on the inside, then the entire game would be exposed, right? I mean, it's no secret that Main Street has been sold out to Wall Street by the Fed, by the government, for more than a decade now, and it continues at an accelerating pace. And people are mad, and they should be mad. And even if they don't understand the underlying mechanism, it's clear that there are advantages, whether it's small business versus big business, whether it's retail investor versus the insider. If you are not on the inside, we don't have a free and fair market. We need to get back to free market capitalism, where the game isn't being tilted in the direction of the big people who have the power and the control.
Yeah, you would think in a battle between David and Goliath, it would be enough just to be Goliath, but also to be able to have the rules in your favor and to change them mid-game. That's a tough one. Carol, always appreciate these conversations. We'll talk again soon.
Well, as you can see there, like the first guy said, the amount of naked short selling is way far above and beyond what they lead you on to believe or what you would actually think is out there. So just like we know on AMC, the naked short selling and synthetic shares are probably through the roof. Obviously, we don't know those full numbers all the way yet. We're hoping to get a better understanding. But we all know that those numbers, like we read today, like the shorts have been returning shares. They haven't been returning shares. They're using options and calls to make it look like shares have been returned, so on and so forth. The amount and how far hedges will go to try to manipulate the market to their liking, to try to screw over, aka us, the retail investor, it's big, far and wide. I did want to bring you guys that update. That way you guys could see what was going on. I told you guys earlier in that video I was going to, so I figured I would do that even though it is right at 10 p.m. over here in Nashville. If you could, make sure to smack the like button. Comment down below. All those things, likes and comments definitely help out in the video. Helps out in the algorithms and everything else. Also, join our Discord channels. Discord link down in the description. Love to have you guys. I will see you guys tomorrow in the live stream. We'll be live tomorrow. Also in tomorrow's videos. I'll see you guys then. See you Starside fam. Peace.